Producers are operating on a thin margin of about $5 to $7 per barrel, despite global crude prices near $70, highlighting persistent structural challenges in the sector. High operating costs driven by insecurity, oil theft, multiple regulatory charges, and financing constraints continue to erode profitability. And joining me to unpack this is AbdulMajeed Amussah, the CEO and founder at DEER Nigeria. Thank you so much for joining us today.
Hi, thank you so much for having me. It's a pleasure.
Right, so Nigerian oil producers are left with margins between $5 to $7 per barrel, despite crude prices hovering around, $70 thereabout. How serious is this margin squeeze for the industry's sustainability?
Well, this is very serious. This is a big issue. At $70 Brent crude price, producers in many other jurisdictions are still able to actually make a healthy return. But if we're saying that Nigerian producers are left with only $5 to $7 per barrel, that's an issue. That's barely enough to cover any reinvestments that they have planned. They would struggle to meet their exploration targets. This completely discourages marginal field development as a whole, and it makes Nigeria just an uncompetitive, jurisdiction for capital. So global upstream investors will be seeking, say, $15 to $20, $25 netbacks, depending on the risk profile and the area. But at 5 to 7, this is a very high risk, low return destination, and is dangerous for long-term sustainability generally. And the industry survives, on short term, and it wouldn't be able to grow.
Talk to us about the factors that are responsible for this. Why are we here?
It could be a few things. We can highlight the major ones. Maybe you start from the very obvious ones, which is the high operating cost. Generally, oil establishments, oil and gas operations, they rely a lot on private security, all the way to bulletproof cars even, just to feel safe doing their work, and their expatriates as well. So security expenses around even pipeline surveillance and so on. And then the evacuation losses, the deferred production, maybe logistics and marine costs, just generally moving things around in the creeks. The aging infrastructure is something else that could also hinder, production improvement. So Nigeria's lifting cost per barrel, I think, is around, say, in some terrains, around, say, it could reach up to $40 plus, compared to Middle East. In the Middle East, we're talking about maybe $15, maximum $20. Even in the US shale, we're talking, $30, $45, things like within that band. Even other places like, say, Guyana is still within that $20 band, And even in the US shale, they benefit from easier financial access, even at that band. The other one we can look at is the regulatory burden on operators. Some of these operators, are burdened with multiple levies. There's overlapping regulatory charges, community obligations. This guy is coming to ask for this. He needs to be carried along. And then just the compliance with the government regulators as well. These are some of the complications. It compounds the cost structure already planned out. And finally, cost of capital is a big issue as well. The question is, how much are our companies able to unlock capital? Nigerian producers, I believe, will be borrowing up to even 25% at Naira rates, and at dollar rates, it's not even that far off. Maybe it might even reach 15%, maybe 12 to 15% dollar rates, if it's even available. If you compare that to the US independents, who are doing, say, 7%, 4%, that's a great rate, compared to ours. And then the Middle East oil companies that are supported by the sovereign, ensuring that they have the best rates to remain in business. So in summary, our producers are operating in a high cost environment, a high risk environment, and a high financing requirement environment as well. And so this compounds to put them in this position pretty much.
Right. I want us to dwell a bit on security. We understand that one of the recently introduced guidelines aimed at, reforming that particular sector is the Host Communities Development Trust Framework, which is designed to sort of give local populations a stake in oil revenues. Are you confident that this will decisively address insecurity and theft in oil-producing regions? I mean, we're looking at how to solve this issue.
So really, there's no magic wand anywhere. These are all humans in action and would require continuous stakeholder management, engagement, and compliance enforcement, pretty much. So the framework is, the idea is simple: get the communities involved and let them get financial benefit. Give them like equity-like participation so that they protect the assets with you rather than trying to sabotage them. So if communities see real transparent benefits, like there's jobs for them, there's infrastructure for them, there's dividends, automatically sabotage will reduce. That's the idea. However, for this framework to really work, like I said earlier, it must be governed in a transparent way, and any faults must be enforced. And funds must not be captured by the local elites, people who are the leaders within the communities, and boards should play their roles and they should function professionally. It will not solve the problem, just as a magic wand, like I said. But it's important that there's a framework that includes the community and ensures that they are better off, as a people because of the operations from the oil and gas companies.
Oh, that's quite interesting. Now, beyond insecurity, away from that, there are other things that have been identified, whether you want to look at regulatory overlaps, multiple fees, and, limited access to affordable financing. All of these are issues. How then do we begin to solve all of them truly and decisively?
So we need to, it's a problem. And some of the solutions, some practical solutions, I mean, we see what the president has done recently with the executive order, which has ensured that there is a bit more discipline in the financial management. So we might need to enforce, for example, maybe some kind of regulatory approval in a single window, so there's transparency and there's a clear understanding of every application in the process. We should digitize the licensing and reporting so that things are actually operating in real time. The fee structures should be standardized, just as the government is putting in the efforts to achieve. And there should be blended financing windows, of some kind, so that these indigenous producers actually can get cheaper finance to work, and then over time create a less risky environment that can attract finance from other pools of funding. And infrastructure sharing, pipelines, terminals, things like that. This infrastructure is very critical. So we should just look at a systemic cost reduction, plan, and not one that we just, speak about. Stakeholders need to continue to engage and see where they can achieve economies of scale and basically share infrastructure if possible, and provide what majority will benefit from, so that everyone is not carrying all the costs of everything on their own balance sheets individually.
Right. Now, industry players say operating costs are becoming unsustainable. Now, if this is not addressed, talk to us about likely consequences for investment decisions, particularly for, whether you're looking at marginal fields or brownfield development.
Yeah, the consequences they're very obvious. I mean, if marginal fields will stall, small operators cannot survive. These thin margins are not good enough for the small operators. The high borrowing cost remains an issue. So marginal fields would not be able to survive and expand and grow and things like that. And then instead of enhancing recovery, producers will simply just maintain output. So brownfield expansion would slow down as well. And without exploration, production naturally declines over time because they would obviously be drilling. And that means exploration opportunities would also decline. This would lead to lower government revenue, lower foreign exchange inflow, weaker reserves management ratio, and they just generally reduced, confidence in our energy security. And it's just a downward slope that is not good news for us. So these are important matters that must be looked at. And it's good to see the essay to the president, Oliver Hygiene, taking, the bull by the horn and getting the important, advisory steps, in place for the president to act and generally make sure that we're on a more positive trajectory that actually makes the oil and gas sector to remain attractive and give the indigenous players who are now taking over the opportunity to really deliver an outstanding result that puts us on the map as a profound energy producer in the continent generally.
All right. Thank you so much, AbdulMajeed Amussah, CEO and founder, Dear Nigeria. Thank you for your thoughts on the show today.
Thank you.